Does it feel like we're living in a constant state of emergency? From supply chain meltdowns to crazy inflation, market whiplash, it feels like a permanent crisis, a perma-crisis. And your bank account is definitely feeling the squeeze. That constant financial anxiety is just exhausting, and it's easy to feel powerless. When the cost of literally everything is going up, the value of your money is going down. It feels like you're on a treadmill running faster just to stay in the same place. But you are not powerless, not even close. Today, we're going to walk through simple, actionable steps you can take to build up your financial resilience, to shield you from chaos and give you back financial peace of mind and security. Mouthy Money is proud to partner with Coinbase. If you're thinking about getting into crypto, but not sure where to start, consider Coinbase. In just a few taps, you could buy, sell, and hold Bitcoin, Ethereum, and a range of other popular crypto assets, all from right here in the UK. Coinbase is registered with the FCA in the UK, and with world-class security, you can invest with confidence. Whether you're brand new or already building your portfolio, Coinbase gives you simple tools for crypto investing. Join millions already using Coinbase. Download the app today and start your crypto journey. Find out more in the summary. Remember, don't invest unless you're prepared to lose all the money you invest. This is a high-risk investment, and you should not expect to be protected if something goes wrong. This is not investment advice, and it is not a recommendation to buy or sell any particular digital asset. I am joined, as ever, by Chris Tuite, Head of Consumer Finance at Communications Consultancy, MRM. We really are focusing in on the big picture today, the perma-crisis that we find ourselves in now. Everything going on in the world, it feels bad. It feels like it's not getting better. It feels like it's just happening more and more often. And the way that translates into our finances seems to be that things just get more difficult. Things get more pressured. Chris, do you feel that?
100%, Ed. Yeah. I think the crisis in the Middle East has really brought that home to me. I've always had this sort of optimistic view that once we get over the latest crisis, that it'll be sunny uplands from here and it'll be back to normal, whatever normal is. But increasingly coming to the realization that whenever we get over one hill, there's another one on the way, on the horizon, and it approaches pretty quick. Yeah, I do feel like that. I do feel more concerned about what this means for my long-term financial prospects, what this means for living standards, what this means for the aspirations and ambitions that I have. So it's a major concern.
So this is the thing, is we have this crisis in the Middle East now. That's what's happening right now. And there are some particular things going on there that is going to have a direct impact on people's wallets, people's household finances in the UK. And as you said, this is just the latest in a series of lots of things that's happening out there. If we track it back a little bit, we had COVID, which brought its own issues that led to inflation. We then had things like Ukraine, again, it made the inflation situation even worse. Now we've got this. There's all sorts of different crises that I could continue to list out. It's probably a bit redundant at this point. But they all have something in common, these crises. It's actually something that's fairly simple to break down what those problems are for normal people like you and me, Chris, and for anybody watching. And those really boil down to what I've already mentioned, which is inflation, and then consequently interest rates, and then beyond that, and this is something which is new now that we haven't had in the past, but is going to increasingly become a problem, and that is the problem of unemployment and loss of earnings. We're going to look through these issues today, some of the real-term consequences of those effects, and then what people can try and do about it in order to, if not make the pain go away, at least try and minimize it. We're also going to look at some of our own personal ways of looking at this and coping strategies. I'm sure Chris is more than ready to share his personal experiences.
As always.
So let's get into it. But first, anybody following along who's interested in the topic, please do let us know in the comments your thoughts on what's going on out there with the current crisis, how you prepare your finances, whether you've got any concerns. We do try and respond to all comments, and we'd like to keep the conversation going. So please let us know your thoughts. Now, what does all this mean in real terms? Okay, we've got the crisis in the Middle East, and the immediate impact of that is an energy shock. And we've already had the first effects of that. Chris, I know you live in London. I'm not sure if you use a car that much or if you drive at all.
I don't drive. My wife does, and we do have a car, and we filled it up once since this has started, and there was a noticeable difference. I'm sure everyone's felt that at the pump. So yeah.
I live out here in the wilds of North Devon. We use cars for everything. We use them every day, 3-4 times a day, because we don't live close to stuff. We have to drive to places. My wife, fortunately, she's on maternity leave at the moment. She's actually hanging around the house with our second son most of the time. But if she were working, she works as a nurse in the community, she does a lot of driving. So if she had been at work, we'd be feeling it even more acutely, especially because she gets paid expenses on her driving, but those expenses don't increase when the price of petrol goes up. So that's the first really key impact we've had. In other areas like energy bills, there's a big threat now that those energy bills are going to start soaring. But the way energy bills are structured in the UK, it takes time for that to feed through because we've got things like energy price cap and that kind of thing. But there does seem to be a suggestion that is going to, I think the most recent figure I saw was about 17% hike in the energy price cap is coming in the summer, which is pretty monumental bill hike for people. This is the kind of short-term real world impact on us, on our finances from the crisis that is happening at the moment. But this all feeds into a wider issue, which is the issue of inflation. Inflation is something we've lived with for years. I don't know about you, Chris. I certainly feel like it's been palpable, and it's still pretty palpable when you go to the shop and you think, paying that much for that seems crazy. Do you feel that?
Yeah, we had a conversation on the weekend. So my wife did a shop at Aldi just to see what it was like compared to Tesco or Sainsbury's, or those are the two we usually use. So did a bit of an online comparison of the two, and the savings weren't as stark as we had hoped, although there were savings, to be fair. But the very fact that we're having that conversation is a major change from where we were maybe 2-3 years ago, where there isn't that much in it, but it's not something we really need to worry about that much. If it goes up £5-10 here or whatever, we're thinking that we're not living hand to mouth. I don't want to give that impression, but we are seriously thinking about what our cost base looks like and making big decisions around what we have, what we use, more in things like home entertainment and stuff like that. Actually, it's just, what do we need? I think I've said before, there's a bit of a sort of lifestyle deflation process going on in my house, which is it's more about the utility of what we got. Okay, it'd be nice to have, but do we need? And then there's a serious conversation going on about that. Okay, we like shopping at Tesco, but do we need to look at shopping somewhere cheaper? All of that is being fed through because of that inflation, as you touched on, in terms of the cost of food and essentials, but also, as you mentioned, fuel. Energy bills is a big one in our house. I know it's not fed through yet, but we're very mindful of the heating doesn't go on in the summer months. And then, as we're going to come on to, that has a bigger effect for our largest outgoing, which is our mortgage. But anyway.
Yeah, so this is the really crucial point about the acute crisis that we have now, and why we're talking about this in the sense of perma-crisis. It isn't just something that happens for a couple of months, big issue, then it goes away. This stuff feeds out into the wider economy. Inflation then embeds itself, and then that leads to the institutions like central banks, Bank of England, having to impose higher interest rates, or even just maintaining interest rates where they are, where the expectation was even just a matter of weeks ago that those interest rates were going to come down. And I think, like you say, the biggest area of concern there, but obviously things like credit cards and other stuff, that there are issues, but mortgages is the big problem. And I was in a position where we signed up for a 5-year fix. We got a great rate on that, and we managed to stay out of, and this, I guess, this kind of illustrates the whole perma-crisis thing. We signed a 5-year fixed rate in 2022, and then all the inflation stuff kicked off on the back of Ukraine, etc. And I was one of those guys sitting there thinking, I've got a 5-year fix. I don't have to worry about this. Not my problem, Gov. And
is that why you've got more hair than me, Ed?
It's making its way back. Don't worry, Chris. But this is fine. I'm sitting it out. I've made a really clever decision here to fix for longer, and great. But here I am, 1 year to go left on that mortgage, and I'm now thinking, I'm no longer in a good position I was. The rates that I had expected to be able to obtain next year on the basis of what was happening in February, I don't think I'm going to be able to obtain those rates anymore next year when I come to remortgage. Now, I've still got a year out. There's perhaps still a bit of easing to come. And I think there is some signs that the mortgage market might be correcting back a little bit. But Chris, I know you're in a much more acute situation now, aren't you?
Yeah. So I think you make a really good point there about when you're coming to the end of your mortgage term, that's a good trigger for midterm planning. You've got to make some decisions about what you think what do you think is going to happen. So we fixed a more painful rate, but one that's manageable. It was not long after the mini budget crisis, which saw rates spike temporarily, and made a decision there. And all roads seem to be leading towards a gradual deflation or slowing of the rate of inflation, and that interest rates would be trimmed, and that I would have a cheaper mortgage when we come to October. That is most definitely not guaranteed now. And I think that's what's led to this idea of, as you said, the perma-crisis thing, is that every 2 years, I'm looking at this landscape thinking it will have materially changed for the better. And it hasn't since COVID. It's continued to show uncertainty. There's greater global instability, pressure on supply chains, inflationary pressures here and there and everywhere. And that's hitting me every which way in the pocket, to the point where I've started to make some serious decisions or serious plans about, okay, I may need to dip into that. We talked before about this probably overly large rainy day fund that I've got together, and that maybe it's a bit paranoid and that money would probably be better off in markets. But actually what's transpiring now is that actually I'm quite glad it's there, because and that it's easily accessible, because there was a point where I was doing the maths thinking, before I did the maths actually, I was thinking, might I need to top up my mortgage repayments using money from that emergency fund? I don't think I will, frankly. I think the trajectory will probably be downwards, but it won't feed through fast enough for me to have a good enough deal where I feel like I can start planning for other things. And that's had a major knock-on effect for things like my pension, where my pension saving is no longer where it needs to be. I've trimmed off a little bit too much of what I was doing there, so that if I look at my retirement prospects now, it seems like that's materially reduced. I'm not able to save as much for my daughter's future. I'm not able to top up my rainy day fund as much as I would like. So it's having real knock-on effects with that. And that's what's driven that serious discussion around lifestyle deflation, because they're non-negotiables for me, Ed. I need to make sure that future me and my future family have resources available to be able to make good decisions, and that we're able to meet our liabilities in the shape of mortgage repayments or anything else like that. And in order to do that, I want to make sure there's a surplus that I can save into that fund. And right now, there isn't. So it's okay, what do we need then to make sure that we can reestablish that buffer, even if it's just a small buffer of money flowing into an account? So yeah, that 2-year horizon you mentioned is really interesting, because if I think back to where I was in 2 years' time, I was optimistic. I was like, okay, this is going to change. We've had a bit of a bumpy ride. Things have been uncertain and there's been inflationary pressures here, et cetera, but hopefully we're returning to something of what I would describe as a normal environment. And what we've ended up with is plunged into another crisis. Not sure that in 2 years' time it'll be sunny uplands. I think more now it's brace yourself, put on your crash helmet, and make good decisions in the short term to help the medium term, which ultimately will hopefully help the long term.
So I think your point around there, around the kind of the cash safety net, is really important. And we're going to come to that a little bit later, just some of the strategies that we can employ to help protect our kind of wider finances in this state of perma-crisis. I think the next issue in this that is perhaps has been the most underrated of recent times. I've always banged on about it, and I think it wasn't an issue in 2022 in the way that it's an issue today. And that is the problem, and this is a UK specific issue, I'd say largely, the rising problem of unemployment. Unemployment rose steadily last year. We've had a new report out just this week that 250,000 people could lose their jobs by the middle of next year, thanks to the UK economy flirting with recession, basically because of the current crisis we're in. And this is the issue that we have. Households in 2022, we're coming off the back of COVID. They had lots of savings in place. They weathered the inflation storm quite well. As bad as it makes everybody feel, most people coped. Things like mortgage delinquencies have remained pretty low, and that's testament to some of the strict stress testing that banks have done around that. But now we're in a different situation where unemployment is on the up. Now, for anybody who's interested in reading in a little bit more detail on this, our colleague on the Mouthy Money Substack, Paul Thomas, has written a really interesting piece about the mortgage market and potential issues with unemployment. It's on our Substack. Check it in the description, so please have a look. But the issue is now rising unemployment means that people are going to stop being able to pay their mortgages. People, when they stop being able to pay the mortgages, it leads to things like property crashes. It creates this kind of snowball effect for the economy that's really damaging. It also creates other and this is something that put my tinfoil hat on kind of thing. When you have large levels of unemployment, I see you smirking there, Chris.
It's never off, is it?
It creates social unrest in a way that just doesn't happen when people have jobs. And it's something that successive governments are terrified of unemployment and try to mitigate it as much as possible, even if it means low quality jobs, that kind of thing. So I do think that's a really big rising issue.
I think that's another thing that's stalking in the back of my mind, the fear of that. So before I even joined this pod, I was mucking around on YouTube as I usually do, and I was being fed adverts by somebody who was saying that you've got 36 months before you lose your job. That advert's obviously been selected for me as a white collar worker for me to view. And obviously they're selling some seminar where I can be the one who survives this. So take it with a pinch of salt. But also, as well as these sort of economic threats with regards to short-term inflation, geopolitical instability, rising cost of this, rising cost of borrowing, there is also a massive threat to our income. It's being espoused constantly in the media that there could be a massive threat to our income. And depending on how I wake up every day, at some point I think, okay, it could be a major issue, which means I lose my job and I lose my house and we're all going to have to go and live in a tent somewhere, right the way up to, no, it's all right. I've got a good understanding of how to use this new technology. I feel like it's going to require human inputs at all times, et cetera, et cetera, et cetera. So I'm going to be fairly well sorted and insulated from it. But what's key at that is that between those two poles lies uncertainty. So you're piling uncertainty on top of uncertainty. And there's the conventional uncertainty, which is quite unconventional, which is the global instability at the moment, which is feeding through into supply chains, which you expect. And then there's this great unknown out there saying there might be a potentially massive threat to our white collar incomes. And what's that going to do to our long-term financial stability? So that's where my sort of rainy day fund is now starting to look like a bit more understandable with all of that context going on. And that sort of fear and doubt is as I say, depends on the day, but it's always there. And that's why the mindset's shifting from it'll be fine to, you know what, it might not be. It might not be for quite a while, and I need to make sure that I've got steps in place to be able to weather even more shocks to what might be coming down the line. Now, I hope that I'm wrong. I'm not saying that's definitely going to happen, but if you look at the evidence since 2019, and that's quite a long time ago now, there's always something else lurking around the corner to give you a whack. And there are people actively saying this AI job apocalypse is coming, and I can prepare so much. It's in the lap of the gods, but I'm going to prepare as much as I can, that's for sure.
Yeah, I think this brings us neatly on to what you can do to prepare. Not everything is in our hands. We can't decide what the government will do for us. We can't decide what countries way beyond our control can do for us. We just don't have that kind of power. What we do have in our power is what is in front of us with our earnings, with our savings, with the financial products that we use and interact with. Now, we don't provide financial advice on this podcast. We're just giving ideas of what people need to think about and have in their minds for their own strategies. Again, anybody who's thinking about this and joined us this far, do let us know what your strategies are to ensure that you're staying ahead. We'd love to hear from you. There are a few different things that you need to do. And we've obviously talked about the key one, which is having some cash savings. It's important, obviously, to try and have cash savings in an account that's got as a good an interest rate as possible, because obviously inflation is going to erode that cash if you've got it in something paying a very sort of low interest. What else can we do, Chris, to ensure we're staying ahead of it? Particularly actually around, because I think you've obviously been thinking about this, around that jobs thing. What would you have in mind about not being the first person on the list of redundancies, even when it happens?
One of the things that I've been doing is trying to upskill as much as possible. So you try and make yourself more valuable to your employer, diversify your skills into more different areas. And obviously mine is in communications and content and all those kind of things, an area which has fallen under the spotlight of what AI is doing. So I'm getting to grips with what all of that means, what AI means for my work, how I can provide a view on it, how I can speak to my clients about it, but also just using the stuff and making sure that I'm aware of it and how to get the most out of it. And then I think there will be a human element to how people use that stuff, but it's that training piece. It's making sure that you're staying on top of it. I'm also trying, and probably doing this to a damaging degree to my sort of general mental well-being, I think, Ed, and don't get me wrong, I'm not crying myself to sleep every night, but it's like paying attention to global events as well, what that means, how does that translate? Obviously, we do this, which is why I do that. But also there's this kind of thing about what does that mean for the short term, mid-term, long term? And if I'm used to the idea and emotionally savvy with it, then I can start to think about here's some practical steps I can take. So it's those two things, really. With the jobs thing, it's trying to stay ahead of the curve, try and understand it better, try and factor it into the work that I do and just provide even more value for my clients and for my employer and make sure that I'm standing out. And then on the sort of what's going on out there, staying up to date with the latest news, staying up to date with the latest developments in tech space and making an AI and making sure that I understand all of that. That can be exhausting though, because the news cycle has never been faster. There's never been more information, in my opinion, coming at us that feels like it could be a potential threat or an opportunity. Staying on top of that doesn't come without its own challenges, but the motivation is high at the moment to do that.
I think that there's other aspects to it as well. Obviously, the cash savings, making sure that you're upskilling. There are more prosaic things that we can do. Trying to pay off your debts as much as possible is so important. Nothing felt better to me than the day I paid off my kind of last credit card. And I did recently achieve that, which was amazing to be released from that, because it's so difficult when you're penned in by it. Then it's like, unfortunately, that, and I think you mentioned it earlier in the conversation, that lifestyle deflation of simply just trying to spend less money, just batten down the hatches a little bit. The irony of doing something like that is that's what causes recessions.
Yeah, it's bad for the economy, but where we are.
Yeah, houses pull back and save more and they don't spend money and the economy grinds to a halt, etc. So unfortunately, but if you need to ensure your financial resilience ahead of anything else. One of the other things actually, which I'd be super interested to hear if anybody's actually explored this or even taken a policy out. You can get things like unemployment insurance, which is and that was something that existed pretty common before the pandemic. During the pandemic, the market basically disappeared because obviously we had the furlough scheme and that kind of thing. It just sent everything haywire. But there has been anecdotally, those policies have been making a bit of a comeback in the past year or so as people look at some of these issues and whether they might be. It tends to be people who are slightly higher earners who go for those kind of policies, particularly because if it's difficult to, say you're earning 80 grand a year or whatever, and you lose that job and there's only 5 of that kind of job in the entire city you live in, it can be very difficult to then go and find another one, sort of things. But obviously, if you're earning a kind of a median wage, it might be a bit easier to go and find another median wage job. But that, again, that depends on what's going on in the labour market. So we don't know. But that kind of policy does exist out there now. It is possible. I think ultimately as well, though, when we have to think about the long-term horizon too, and that is that we can do all of these things to batten down the hatches for here and now. But as we said at the start, is this perma-crisis? When is this stuff going away? Are things going to become more sedate and more normal? And if you are now agreeing with us in the sense that no, probably not going to get less volatile in the next few years, then actually this becomes about more than just a short-term, how do I protect myself? It becomes a longer term of how do I protect myself against long-term instability, long-term issues? The first thing I'd point out is that if you look at stock markets like the S&P 500, it's doing pretty amazingly well considering what's going on. It's actually now above where it started before the crisis began. So the long-term answer is you need to keep investing. You put money into ISAs. You need to make sure that you're getting your employee match contributions and your pension and ensuring that long-term person you are saving for, who is you just in the future, you are still helping them, because it doesn't look like things are going to get easier. So we need to protect what we've got now, but we also need to protect what we could have in the future against that outcome. And it's making sure that all those things are possible. It's so hard. We've talked about it many times on this podcast, how hard it is to juggle all of those priorities and you unfortunately have to make sacrifices. This is what it comes down to, doesn't it?
Well, it's really, I agree. This is one of the reasons I'm not willing to sacrifice that long-term stuff. So I'd rather look at the short-term, because I see it as, it's not, I suppose it's not losing money, but purchasing power being decimated by rising prices is really deflating, right? One of the positives I get is looking at those that, I know there's volatility, but generally over that period of time, looking at how those investments have performed for myself, my wife and my 2 kids, and that's heading in the right direction. Slower than I would like, and there's been a few detours along the way, but it is heading in the right direction. And so there is a sense of progress being derived from that. The only real sense of progress at the moment, this might start feeling a little bit like the world's collapsing in on top of me. Not only is there a practical reason to do that for long-term me, but also just in the here and now, doing something that is tangibly making progress in the right direction is a good thought exercise for me to be doing it. And that's probably, you've asked me before, do you check your investments? I do. And it's probably to get that little boost of dopamine in my head when I see that number's actually ticking up, rather than whereas my week to week budget and what it gets me is ticking down.
Yeah, I think that's a good place to bring things to a close. Again, I will say we'd love to hear from you if you have your own kind of strategies for coping with the state of the world and making sure that your finances are always ready for that situation. Do let us know in the comments. Please do give us a like and a follow along for more. We talk about this sort of topics all the time on the channel, and we welcome all our kind of viewers' contributions to those efforts. And we do try and read out some of the replies as well when possible. With that, Chris, I should say thank you very much.
My pleasure, Ed, as always.
And thank you everybody for following along. We shall see you all again very soon. With that, thank you and goodbye.